Well, December CPI report showed prices were higher than expected. We saw prices rise 3.4% year over year compared to 3.2% that was expected and 3.1% last month. Now, the energy index driving a lot of those gains. President Joe Biden and his administration as we head into the thick of a contentious election year. What does it mean for them? Well, we have Daniel Hornung, National Economic Council Deputy Director, joining us this morning. A pleasure to have you on the show here. So, I want to get your reaction to this CPI data because we really need to put it in context of how CPI has actually looked over the past year as well.
Well, it's good to be with you, Rachelle. I think this morning's report was an encouraging one overall. It showed core inflation at its lowest level since May 2021. And we've seen that progress in the annual core inflation measure at a time when, over the course of last year, now that we have the full year of data, the unemployment rate remained below 4%. We saw 2.7 million jobs created over the course of the year, strong real wage growth over the course of the year. And that last point is particularly important because we now see wages adjusted for inflation higher than they were 4 years ago, which is really in contrast to the forecast that we saw last year that said it would take a big uptick in unemployment, a wage slowdown to get inflation down. That's not what we've seen at all. So we think overall an encouraging report. I think from the president's perspective, more work to do to continue to lower costs for American families, but an encouraging report signaling real progress at the end of 2023 heading into 2024.
And as you mentioned there, President Biden out with a White House statement saying there is much more work to do to lower costs for American families and American workers. But what are some of the ways that he can actually play a role in that versus what we already see naturally happening with the economy and inflation?
Well, we have seen real progress on certain key prices actually coming down over the last year as the economy has normalized, as President Biden's efforts to help fix supply chains and bring the private sector and labor together at our ports throughout the country has really worked its way through the system as more Americans have gotten back into the labor force, thanks in part to the strong labor market that really his policies have helped bring about. Looking ahead, he's going to be laser focused on implementing historic legislation he's passed to lower prescription drug costs, to lower health insurance premiums, to lower clean energy costs. He's focused on taking on junk fees and doing everything we can to lower costs for the American people. And that really is in stark contrast to what we're seeing right now from congressional Republicans, which is a focus on having trouble even keeping the government open, focusing instead of on lowering costs for middle-class families on tax cuts for the wealthiest Americans and the largest corporations. So that's a real contrast in front of the American people right now on the economy.
And Daniel, when people are, heading to the polls where they're deciding on a candidate, one of the things that really hits home for people is how they actually feel about their finances. And Axios and the Harris poll came out with a survey, and they said of the people who feel the worst about their finances and about the economy, Republicans, rural residents, renters, women, and singles disproportionately feeling worse there. So how do you connect the dots between some of the progress that you're laying out in the economy, but how people are actually feeling about that, considering that this is an election year?
Well, there's no doubt it's been a difficult several years for Americans coming out of the pandemic, coming out of the deep disruptions to global supply chains. I mean, we saw elevated inflation all over the world because of those issues. And so the president is really focused on doing everything he can to lower costs for families. The real wage growth I was talking about earlier is important because over a sustained period of time now, about 9 months, we have wages growing faster than prices. Our view has been that as that continues to sustain itself, that Americans will start to feel better about the economy. They've felt good about their financial situation themselves for some time, but I think those real wage gains, those increases in wealth relative to the pandemic, that'll help folks feel better about the overall economy as well. And we saw some initial indications of that in the consumer sentiment data we got in December.
And I do want to ask you about the consumer, because part of the poll that we saw here, John Gerzema, who's the CEO of the Harris poll, he suggested that people are consuming in denial, that they're continuing to spend, run up credit card bills as we see some of that credit card debt hitting $1 trillion, even though they're short on cash. But if people aren't feeling good about their finances, they're more likely to blame the government. So when you look at the strength of the consumer, but you contrast that with their debt and how they're spending, how confident are you about how the consumer feels about the president and how he's handling the finances of the country?
Well, we are seeing in the data strong consumer activity, as you mentioned, continued over the course of the last several quarters. That is really enabled because we're seeing a strong job market. We're seeing continued real wage gains. That means Americans have the resources they need to buy the things that they want and that they need. And the president is going to be focused on sustaining that strong economic activity, sustaining the strong job market, and really making the case to the American people that he has a plan that is about lowering costs for them, expanding opportunity for them, and that's in real contrast to the focus we see from Republicans on Capitol Hill. That's really about cutting taxes for the wealthiest Americans and the largest corporations, and that is their primary economic goal right now.
And so are there any headwinds that you see to that economic progress? A lot of people wondering if we're going to see a recession, or if that's off the table. Is that something that you're forecasting?
Well, look, a year ago, I think that recession was very much in the base case forecast. We've seen tremendous resilience over 2023. We think as we head into 2024, we're positioned for continued resilience. Obviously, we need to continue to monitor all risks on the horizon. I think if you look across the global economy, the United States really is uniquely positioned for continued strong economic performance into 2024. But we'll be mindful of all risks on the horizon, from geopolitical risks to domestic risks.
I appreciate you taking the time to join us this morning. Daniel Hornung, National Economic Council Deputy Director. Thank you so much.
Great to be here.